A happy and prosperous new year to all, and welcome to another episode of Market Roundup. My name is Ranu De Silva. Welcome to Sean for the show. So everybody at home, what we are going to do today is we want to give you a brief roundup of what happened in 2016, and we want to talk about what we expect for the coming year and how the macro environment is going to help us in terms of what our expectations are and how the business environment is going to be and overall and how the market will perform. So Dushan, how do you think the market performed in 2016? I know it was a good year. Consumption was high. We saw a lot of consumption happening within the positive wealth effect was also in play as well for a time period. And I think also even now we see some of the ripple effects coming on with the consumer electronic market thriving. So how do you see 2016, or how did you see it?
Yes, Ranga. Before moving to a question, let me start with the 2015,
right,
as it was the base case for 2016. In 2015, surprisingly, we had an expansionary fiscal policy and two accommodative monetary policy simultaneously, which led to a huge budget deficit and BOP deficit. So we categorized 2015 as an overheated economy because Sri Lanka as a country, we have overspent.
Yes.
In addition, you can remember that our secondary market sovereign bond yields going up above 8% level subsequent to the credit downgrade by major rating agencies. And that was really unsustainable level if you look at our rollover, our debt. So once again, during 2015, we went to the IMF to get some sort of assistance in terms of broader macroeconomic management. So that was really a confidence booster, and we saw some kind of a moderation in our secondary market sovereign bond yields subsequent to the IMF package.
Right.
But most important thing is, Ranu, this was not the first time we witnessed such kind of a overheated economy.
Yeah.
So basically this is a cycle, and it is quite easy to predict, because when we are analyzing this cycle, we are looking at the BOP number. So historically, if there is some global event or a domestic market policy such as import stimulus or a too accommodative monetary policy which destroy our BOP position, we ended up with a overheated economy. You know that 2008 we had an overheated economy, yes. Then 2011 we had an overheated economy, and then again 2015 we had an overheated economy. However, compared with the previous episodes of BOP crisis, during 2015 the global uncertainties played a huge role, given the fact that the US interest rate hike.
Yeah. Basically,
we saw massive capital outflows from the emerging markets as well as frontier market countries, including Sri Lanka, due to the US interest rate hike. So Ranuka, coming back to your question, with these developments, the 2016 was a year of adjustments to the overheated economy, similar like 2009 and 2012. We saw numerous monetary policy adjustments, we saw numerous fiscal policy adjustments such as 2 rounds of a policy rate hike, VAT increase to 15%. And subsequently, we saw the market interest rates also jump by nearly 400 basis points during 2016.
So that's how you see 2016. It has been a bit of a tough year, but again, like you said, even though the 2 policy hikes, we've seen private sector credit growth continuously on a high end, but on a slower pace. But we've seen it growing. So, what is? Taking 2016, I thought it was a okay sort of year, and I think, like I said before as well, I understand the policy rate. They were trying to control the economy. It was overheated, of course, and the measures were brought in. I'm thinking 2017 is a little bit more tough, because I see those effects. I see these possibly coming in. I foresee some of these things, Dushan. So your take, especially with the disposable incomes will also come down in what I think as well. I think the inflation numbers are also going to hit. So Dushan, in your opinion, where do you see inflation, or how do you actually see it for 2017, and how do you see 2017 outlook, Dushan?
So to answer your question, Ranuka, I will use more of a top-down approach, because we believe the global environment will be much more challenging in 2017 compared to 2016. So to start with the US economy, the Trump's surprising presidential election win has created a huge uncertainty for the global economic outlook in 2017. However, having said that, if you look at the basic macroeconomic fundamentals, I want to mention a couple of factors, particularly the US labor market. Now the US labor market has been evolving to a more of a full employment level. So we expect the US unemployment to hover below 5% level during 2017. And particularly if you look at the energy prices, we expect the energy prices to remain resilient, both WTI and the Brent, during 2017 due to the OPEC's decision to scale back the production. So as a result, we expect the business investment to increase during 2017 due to the stability in the oil prices. So if you look at the fiscal policy, US fiscal policy, we expect the US fiscal policy to be more accommodative during 2017 due to the expected downward revision in the tax rates as well as the public investment in the infrastructure projects. So as a result, with these developments, we expect the US economy to strengthen further during 2017. And inflation, you know, the US inflation still remain low, but we expect the US inflation to gradually increase to the Fed 2% target level. So as a result, these developments will strengthen the case for the US monetary policy tightening in 2017.
Yeah. So Dushan, again, you know, so in what you're saying, we see that the Fed rates, they were expected to increase another round in another quarter. So with that target being able to be achieved, and you know, there will be more spending. So what you're trying to round up is that that's definitely a huge possibility that could happen. Am I right?
Yes, we expect at least another 2 rounds of a policy rate hike during 2017.
Right.
So that would have a huge ripple effect. If you look at the first of all, if you look at the capital flows, we expect the capital flight back to the US economy with the rate hike, and this will negatively impact for the particular the emerging markets as well as the frontier market countries with significant dollar denominated debt. At the same time, it will negatively impact for the emerging as well as frontier market with significant current account deficits. At the same time, we expect the dollar to be strengthened due to the US interest rate hike. So this will further drag down the global trade going forward.
Right. So we see a lot more concentration of money going back into the US in terms of US dollar. Good. Thanks. I mean, also all these developments, Dushan, I touched a little bit before where I've come here, we talked about a more top-down. You said, yes, I understand the global perspective. I mean, when it comes down to locally, I understand there has been a consistent capital flight again with the first round that happened with the interest rate hike. I saw that happening in the market. I saw, the equity also is people, especially the foreign investors are a bit slow to catch on to this. Even the multiples are very, very attractive. Still, we don't see a huge flood in here in terms of foreign investments. But on a macro side, I spoke before, we might see some very tough times is my expectation, because all the measures taken in 2016, we will have to see those effects coming in 2017. I'm guessing, disposable incomes won't be the same. What do you expect for 2017 in that case, in this kind of environment? What is the macro outlook for Sri Lanka?
Yes, Ranuka, in terms of the macroeconomic outlook for Sri Lanka, I want to mention a couple of risks in our pocket. First one would be our lack of export diversification. Our major export destinations such as US, UK, Eurozone are now becoming more inward oriented due to the recent geopolitical developments such as nationalism, anti-immigration. At the same time, if you look at our debt, particularly the dollar denominated debt, so we have a huge debt burden going forward. So as a result, we expect the LKR to depreciate further during 2017 due to the limited resources to defend our currency, particularly the foreign reserves.
So Dushan, in terms of a currency, and that's the first step, where can we expect the dollar to be at about 150 levels? Is that a reasonable assumption, we would say?
Yes, actually we are looking at a nearly 5% depreciation for 2017 in our base case scenario.
Right.
If you look at our worst case scenario, we are looking at a nearly 8% to 9% depreciation.
Okay.
So which is similar like 2012 as well as 2015.
Right.
So that's from the LKR point of view. If you look at the interest rate point of view, I want to mention a couple of things, particularly the private sector credit growth. Private sector credit growth is still at a high levels. And if you look at the inflation numbers also, we expect the inflation to remain upward during 2017 due to the recent fiscal policy tightening. So as a result, in terms of the interest rate point of view, we are looking at a nearly 50 to 75 basis point increase in the policy rates. And subsequently, we expect the market interest rate to adjust by nearly 250 basis point during 2017. So subsequently, we expect the GDP to slow down we are looking at a nearly 4.5% to 5% GDP growth, so quite subdued GDP growth. However, again, the major catalyst would be the construction sector.
Right. Okay, on the same note, Dushan, so I mean, we know it's a tough year. Again, inflation is going to be on the high numbers. I also expected that GDP will slow down, but we are looking at construction. But again, I haven't seen the major projects still kicking off with the governmental projects, even though they are initiated, etc. But I think, in my opinion, I think 2017 will be the time of year that the policymakers are going to settle down and maybe actually go for these projects. I see, but also the domestic projects also are quite heavy. I think even on the loan books we see a lot of domestic in terms of housing loans also dispersed quite a bit. But on the market wise, Dushan, I mean, is it right to assume maybe the construction sector, manufacturing are the picks that I would have, because I don't think the consumption related companies, last year we were very bullish on the consumption companies that were going to perform. You're looking at the retailer outlets, etc., people with that. But am I right to assume that on the 2017 front, Dushan, in terms of manufacturing and construction? What's your take on that?
Yeah, if you look at the broader market, once again, like I said earlier, 2017 would be a year of adjustments. So at the same time, we do not expect a reversal in the interest rate cycle during 2017 also, due to the prevailing global uncertainties. So once again, the 2017 would be a year of adjustments, and history has proven the fact that the equity market has been sluggish during the years of adjustment, such as 2012 and 2016. So as a result, overall we expect the market to remain weak during 2017. But having said that, like I said earlier, the construction as well as the manufacturing sector, there are quite few fundamentally sound counters trading at attractive multiples. So your investment strategy for the 2017 would be a selective bargain hunting with a long-term investment horizon. In addition, the one important thing is, considering the cycle we are in, the listed debenture market also provides some attractive investment opportunities in terms of the investments for the investors.
So to round up, I think we see 2017 a very big adjustment year, and we will see some of the selected counters, like we mentioned, will be performing, because we see the fiscal policies going ahead, and we know that the policymakers will have to start on these projects as promised, etc. So we know the construction sector, including the domestic sector, also moving in terms of the domestic building, etc. So the construction sector is one of the winners in the market, we would also expect. And also the manufacturing sector is where we feel the selected counters could be in those sectors. So that is a silver lining. I think it's a good bargain hunting time. I really agree with Dushan on that, and I think we shouldn't lose the opportunity. So rounding up in terms of the market, I would like to for the market roundup, thank you very much for tuning in. Thank you, Dushan.
Thanks
for joining me. Have a very good day, everybody.